and no doubt the Blackwell shipment guidance was something that many investors were looking at too. Of course, we do have the commentary around the supply not being able to meet demand expected for several quarters or so, no doubt giving the company somewhat a degree of pricing power in this space. But at what point do you think that this dynamic becomes a concern for investors?
It's the $64,000 question, as we say in the States. Right now, believe it or not, even though the stock tripled last year and is working on a triple this year, it's trading at about 35 times next year's earnings. And earnings are supposed to grow 40 to 50%. So that is a PEG ratio of less than 1. That's actually an attractive valuation. The problem is, at what point do the folks that they're selling their GPUs to, what we call these AI hyperscalers, do they quote unquote digest their purchases and slow down their purchases and their build out of the data centers? If that happens, and then you no longer have the growth story underpinning. But I don't think that really is a risk at Nvidia, not just in 25. I also have a pretty robust forecast for 26. So yes, down the road, perhaps, but I actually think it's pretty clear sailing for at least 2 years.
From a valuation standpoint, Paul, and I know I keep coming back to that, many people would be saying that, look, with a company like this, price to earnings doesn't quite matter. How would you kind of counter that argument at this stage, given that it seems like the pace of outperformance is slowing? So they're still outperforming, but the run rate is kind of adjusting to the lower end.
Yeah, that's the key, because the stock has done so well, regardless of valuations, that people need a steady diet of meet and beat and raise guidance for the next quarter. We're seeing all those things, but as you said just now, to a lesser magnitude. An 8% EPS beat in the quarter announced today versus 19% a year ago. And so it's kind of a matter of expectations. The fundamentals are strong. You know, their second source, at least in the United States, is advanced micro devices, but things cannot be going well there, because last week they announced that they're going to fire 1,000 people, which is 4% of their global workforce. And so the way I look at it, if there are any manufacturing glitches, and that was one of the things that I like to hear in today's call, that they didn't make an excuse for what we've heard as a rumor in the last couple of weeks about a overheating of the Blackwell chip. They're now guiding to greater Blackwell shipments in the next quarter than they thought 90 days ago. And in the meantime, if you ever have a slowdown where you have customers digesting, I still think the AI market is very, very big. And even though over time, Nvidia will lose some share, they can't always have all the market share. They have an incredible lead right now, and it might be widening rather than narrowing.